Daktari, you have been in the banking sector for over 2 decades. You've seen the bank grow, you've opened branches, you've officiated opening of subsidiaries, but banking is changing. It's no longer about buildings, it's about convenience, and that is your phone, that is your accessing your account from your desktop. We're seeing lending is going to the digital side of things. As a bank, how are you aligning yourself to respond to this huge opportunity?
Thank you very much. It's true. I've been very privileged to see Equity move from being technically insolvent, number 66 out of 66, to be the Equity we know today, the market leader with 9,000 members of staff spanning over 5 countries. And I've seen the era of brick and mortar. When we started in Kagema, Kerea, in Murarandia, with our branches. And then I saw the era of ATMs. They came. And I was very, very privileged then to see the credit card or plastic money coming in and trying to create an alternative. But the greatest revolution that I've witnessed, what we made banking, democratized banking, and removed all the limitations of banking and made banking accessible to the ordinary Kenyans. I entered the banking space when only 4% of Kenyans had bank account. Today, 86% of Kenyans have bank accounts. What really made it possible was when we removed what one would call regulation in terms of minimum balance. When we removed the minimum balance requirement, we opened the floodgates for customers to walk in. When we opened the restriction on liquidity, I entered the banking industry when you could only withdraw once every month, once every week, and you had to give a 10 days notice if you wanted to withdraw less than more than 10,000 shillings. That limitation on liquidity, where we gave Kenyans the freedom to withdraw as many times as you want, as much as you want from your account, gave them the assurance that when they need their money, it's always there. I went into the banking industry when we used to open banks at 9 a.m. in the morning and close at noon. And now banking is a 24-hour. That flexibility of making banking not the place you go to, but what you do on your phone, compressing distance and geography, so they became irrelevant. I can do banking wherever I am, whatever time, 24 hours. That opened banking. However, there's still more things that could be done. And that is where Equity as a market leader in innovations. And looking back, I'm glad that Equity was credited for disrupting and democratizing banking in Kenya. Yeah. Today, Equity is revolutionizing banking, and has revolutionized banking in 2 aspects. The first one was taking banking to the last mile, and that was done through the agency. We moved from the banking hall to the nearest shop in the village, and you could do the bulk of banking transaction, deposits, withdrawals, account opening, insurance, and the rest. And then we realized that even the last mile was not good enough, because the agents close the shops at 10, and somebody goes home. And we said, why don't we put banking on a self-service platform, the mobile phone, Banki Yangu Mkononi, and you have your phone at midnight, you can wake up and... As a result, we have seen the bulk of our loans, the peak of lending in Equity Bank now is between 5 a.m. and 6 p.m. As people plan for their day, that's when they do their budgets and realize how much they need, and quickly get onto their phone, and within 2 minutes the loan is granted. That is the convenience. So we came to an era of freedom, choice, and control. It's no longer being controlled by the credit officer or manager, not the branch manager who chooses when to open. I have my bank with me. I serve myself, I access my money wherever I want, wherever I am. That is what has really revolutionized. I'm really glad that Equity has put Kenya on the map, because we are the global leader in mobile banking, and we are the global leader in agency banking. And today, again, a new feather is just about to be put on our hat, that of digitization. The most digitized bank on earth, with 97% of all our transactions happening outside the branch, and 93% of all loans being originated and processed without human intervention, other than the customer, being originated by the customer on their phone, and it's granted. That is all about convenience, is about efficiency, is about reducing limitations, less friction, barriers, but more importantly, delivering convenience.
All right. And in estimation of what you've said, Dr. it simply now means that eventually you might have to downsize, because if you're being a digital bank, you have 9,000 employees, you have to take the bull by its horns eventually. As you give us your thoughts on this, also talk to us about the next phase for the bank.
Thank you very much. As I've always said, these are strategic initiatives. It's not things that are happening in the market. We are driving it. So before we initiate it, we have a strategic plan. I want to look straight into the eyes of my colleagues in the bank and assure them, like I've always assured them, there will never be retrenchment in equity. These are things we bring to ourselves. And basically what we'll continue to do is to create new opportunities. Like when we digitized the banking, we said, how will we deploy our staff? The first one was the most experienced. We asked them to go and start our foreign subsidiaries. We are now a multinational company with its headquarters in Kenya. We're in all the way to Kinshasa. And so if you look, we now export our staff like as expatriates to come and help. If you look back in Kenya, we now have a telecom, Equitel. We now have a fintech, FinServe. We have taken most of our staff into those. We have an insurance agency that has taken. We have a custodial business. We have a brokerage business. And we have an investment bank. We created opportunity for our staff. And all that we need to do is to retrain them. The second thing is that while branches may not be necessary for banking transaction, our people still need to be advised. Banking is very complex, and banking is a very technical subject. So we are converting our branches into three things. The first one is sales offices, because there are still 14% of Kenyans who don't have bank accounts. So we need to reach out to them. There are complex transactions. We need to advise our customers. And more importantly, we need to cross-sell to our customers. As the country becomes digitized the way we have digitized, maybe our branches will become distribution centers for goods and services, so that there is physical fulfillment. You pay for goods and services digitally, but the goods and services must come to the village. And maybe the collection point would be equity branches. And essentially then what that will do is that it will create a complete new logistic company. So we never run out of ideas of how to keep our staff engaged. They are the internal members. They created this bank. I can't look at them in the face and say they are not. They will continue reinventing themselves. And there are many opportunities for us to serve this country.
All right. And Dr. you wear a number of hats. You are still the chairperson of Vision 2030. And looking at the bank, how are you sort of positioning yourselves when it comes to tapping into the big four projects as a way towards sort of getting new revenue lines for the bank, as well as tapping into the securities market when it comes to raising funds towards doing different projects out there?
Thank you very much. One, let me deeply appreciate the privilege and the honor that was bestowed on me to serve Kenyans. It gave me an opportunity to scale up myself from serving in a company to serving a country. I've been involved with Vision 2030 since 2003. And to the Kenyans out there, Vision 2030 is real. When we started thinking about it, the GDP for the country in 2003 was just 1.1 trillion Kenya shillings. Last year, the country almost reached 8 trillion shillings, national production in 1 year. The GDP per capita, or the total wealth divided by population, in 2003 was only 27,000 shillings. As we speak, last year the number was 167,000 shillings. And if you remember, that time, the number of mobile phones in the country was just 1 million. We're now talking of 42 million handsets in the hearts of Kenyans. So we can see huge growth. But the number that really impresses me most is what happened to our education system. We had only 300,000 kids joining Standard 1. We now have 1 million kids every year joining for Standard 1. And we had at university, about 8,000 university students. We now have, last year, 66,000 students joining university. So a lot of progress have been made. I will lead Equity Bank towards supporting Kenyans to make Kenya a better country for all of us and to create opportunities for every Kenyan. And every Kenyan who has a dream in the Big Four can walk into our branches and give us a chance or challenge us to support that dream being come true. Why? Because 50% of the national budget, 1.45 trillion, has been put on the Big Four.
All right.
So that's the only way to connect with the economy as a Kenyan. Align yourself to the focus of the government.
Fantastic.
This is a Marshall Plan to transformational agenda of the Big Four, and Equity will facilitate. As we saw, we have 169 billion shillings, 160 billion shillings in treasury bonds. We'll release these to Kenyans.
All right. Many thanks, Daktari.
You're most welcome.
Always refreshing to speak to you.
Thank you.
And we've been hosting the Chief Executive Officer for Equity Bank, and that is Dr. James Mwangi, who is leading the largest bank by customer numbers here in Kenya. And of course, sharing some interesting insights around the banking industry, and is quite optimistic that in the event that the rate cap is repealed, this will unlock significant capital from the banking community.